Good morning and welcome to Bazaar Morning Call. I am Anuj, with me Prashant and Sonia. It's Friday and we are starting a new series after putting behind a really sort of treacherous series, especially in the last fortnight. What's interesting this morning though is that the global cues are a bit of a mixed bag. The US markets were down and the equities did see a bit of a risk off despite the dollar retreating. And it's a very sharp retreat that we have seen from the highs of 115 to 112. Yesterday looked like a one-off and it looked like dollar was again inching up, but that's retreated. And one thing which stood out for me really is the old economy stocks making a huge comeback. Yesterday there was a massive moment. The ExxonMobil market cap has moved above Meta after 11 years or so. So just telling you about the kind of shift which is taking place in the global order. Let's see, the SGX Nifty is indicating that on the policy day we will start with about a 50-55 point downtick and then take it from there. Prashant, Sonia, hi, morning.
Hi, morning, Prashant. Absolutely. I mean, and it's the big policy day today. So, ahead of that, perhaps people may not want to take any big bets. Although I guess the verdict is out. In the sense, people know what to expect this time. They're not going in with their eyes shut, right? Global markets, of course, not looking that great this morning. Dow down about 458 points. The S&P 500 has now closed at a new low, new 52-week low. And, a lot of corporates have sort of voiced concerns about the business. So Nike is the latest one. Nike, the stock was down over 9% in after hours. The company said that supply chain, inventory issues, a stronger dollar, higher discounts are all hurting earnings. Although the numbers for this quarter were not too bad, but going forward there is some caution on board. So corporate USA is getting hurt at the moment, which I think is matter to take on board. For our own markets as well, FIs have sold a large amount of almost 2,700 crores in the cash markets. DIs bought about 2,500 crores or so. In the September series, as Anuj was pointing out, it was quite a tough one. The Nifty was down over 700 points. We kickstart a brand new series today. We start off with the RBI policy today, where there's more than the 50 basis points rate hike. Any change in the stance to hawkish will be watched very closely. We also have the auto sales numbers tomorrow. And over there's a strong growth that's expected across both passenger vehicles and the commercial vehicle segment. So keep that in mind. But Anuj, this reminds me of a couple of the bear markets that we had in the last few years, when in hindsight that was the best opportunity for retail to sort of park their money or invest on dips. Do you think this time could be different?
I think, Sonia, my view has been very clear. This is a market to buy in terms of portfolio. If you're a trader, you have to respect the screen. I don't see a Indian bear market, honestly speaking. And in fact, today is just one of those days where my gut feeling is that post-policy, perhaps if the market protects the lows, the bank nifty could actually give you a very good risk-reward trade on the long side. It may not work out, but the risk-reward would be extremely in your favor, given the bank nifty's recent move. Now, the new series is starting with massive short build-up. I have not seen this kind of shorting by FIIs in a really, really long time. And just to put some numbers in perspective, the FIIs are starting the new series with 1.21 lakh short positions. Only one-third of the longs were covered yesterday on almost every short contract. Was rolled over, not covered, rolled over. So 1.21 lakh short contracts. And if you just do a basic arithmetic of the contract size and all, it means that the short book from FIs is worth $1.5 billion. And $1.5 billion of shorts in Indian market or at index level. I'm not even going into individual stocks. So, and anecdotally, October marks the end of the downtrend. Though the issue is that how deep is the downtrend? That's something that we don't know, but maybe that's why you want to sort of build portfolios in this market on every decline. The Nifty has given up 45% of the entire rally from the June. I look at close to close data. Now, 50% retracement would mean bottom around 16,680, and 66% retracement from 50 to 66% normally is the zone that you look at, would mean a bottom somewhere around 16,250. This is if the market is still maintaining its previous lows and sort of makes a higher bottom, which is my base case. If the market breaks that, then you have to take that into account. But the bank nifty, as I said, has to lead any kind of recovery. The bank nifty still has some cushion above its 200-day moving average. That comes in about 800 points lower at 36,848. So an index in a bull market going through correction, you normally try to buy as close as possible to 200-day moving average. On the Nifty, because of the weight of the IT index, That's the problem index, and that's why the 200-day moving average of 17,000 actually might act as resistance on the Nifty, like it was acting as some kind of support. But Prashant, what's happening globally?
I mean, I just hope we don't get another session like yesterday, right? Which was neither here nor there. I mean, 15 points, 20 points. I mean, reporting on a market like that is tough.
Very tough.
But, you know, so global markets, though.
Trading would be, though. If reporting is that tough, trading these.
You know, you can kick back and
moves.
just take a day off, right? I mean, unless, of course, you're compulsively in the market. So global markets are looking disorderly. I mean, I think that's the best way to describe it. It's swinging between hope and despair. You know, there are days like day before yesterday when the market shot up, and for a day it kind of seemed like not all is lost. And, you know, the title of my piece yesterday at the same time was maybe a temporary bounce. And I think it is been temporary because stocks have plunged once again. The basic reason is very simple. The fragility in the markets is originating because there is lack of an anchor for interest rates. When I say lack of an anchor, I mean there are so many pulls and pushes for where rates should finally settle at. There is, of course, inflation. There is consequently growth, which perhaps will falter at some point in time. So how should markets price that? There is the fisc in many economies, and so on and so forth. I mean, multitude of reasons. And of course, there is no Fed support. I mean, I think, of course, that explains a lot of it. That's the underlay for a lot what is happening right now. You had Fed support. You had, the Fed put, which no longer is there, at least not right now. So rates went up once again. Remember, day before yesterday, the US 10-year lost some 20 basis points. The 2-year, the 5-year, the 10-year all went up 6, 7, 5 basis points respectively. Equities were sharply lower by about 2% and more. The dollar has been surprisingly soft. But mind you, the dollar is, the DXY index, which we track, is from 114 point something, it's down to 112. But the fact is, it's been influenced in an outsized way by the pound, which has rallied, and the euro, which is pulled back as well. So that's put pressure on the dollar index. On Wednesday, the dollar index also formed a bearish pattern, but moves have been so large, you don't know what to make of, whether you should pay too much attention to some of these outside days, both bullish and bearish. But for what it's worth, we had a bearish outside day at trend highs at 114.5 on Wednesday. So we'll see. The fact is, I would say, the impulse is for the dollar to move higher over a period of time. There can be overbought situations, oversold situations that may influence things in the very near term, but the impulse is higher. So that's a dollar. Just in terms of news flow, you had out of UK, the Prime Minister there kind of doubling down on the economic plan with regards to the fiscal easing, which is tax cuts which were announced, so no backing off there, which will at some point again put pressure on the pound, notwithstanding the squeeze higher last night. And today we've got Russian President Putin, who's due to make an announcement. Most likely the market is speculating that it'll be about sort of including some of the annexed territories within the Federation of Russia, which will, in some way give him more powers to defend those territories more aggressively. So this will only mean escalation, not de-escalation. We've already seen moves from the EU, etc., in terms of more sanctions recently, and we've got this lined up later today. The most direct way this shows up, of course, is in energy prices for markets. So keep an eye out on those aspects as well. So it remains tough. Global markets, of course, quite tough. So
absolutely. And in that context, what the RBI says today on inflation is also extremely crucial. The CPI inflation data, the last tick was 7%, much above the RBI's comfort zone of 2 to 6%. So most economists believe that the RBI may perhaps front-load rate hikes. It's not just the amount today, but what the way forward could be. What is their stance on inflation? That's also extremely crucial.
Absolutely. But my sense is, and RBI being prudent that it is, and I have a lot of respect for RBI, Sonia. Look, the reality is that in last two months or so, we have seen a very sharp decline in commodity prices, especially crude prices, right? And in India, crude really forms a large basket of what happens to inflation. And we haven't seen a pass-through in petrol and diesel prices for some time. And my sense is we are near some kind of announcement of a big petrol and diesel price cut. because now oil marketing companies have started to make decent profit once again. They've covered their losses and they've started to make profit. So once you see some kind of a decline in petrol and diesel prices, that automatically trickles down to everything. And in that sense, maybe, and just maybe, we have seen the peak of inflation in India. So in that sense, do you really need rate hikes? I mean, I don't know. Maybe the RBI says, okay, maybe we don't need aggressive rate hikes from here on. If that happens, I think that would be extremely bullish. So let's see. I mean, keeping our fingers crossed. Of course, we'll hear from the governor soon, and then let's see what he says.
Okay, that made me feel really good, when you said there's a big petrol price cut coming. I mean, veggie inflation at 13%. Of course, prices for everyone has gone up, right? Relatively, perhaps.
But I thought you bought the latest EV, right, Sonia?
I'm thinking of it. Waiting for the charging infrastructure to pick up.
Whenever Sonia says veggie inflation, this I picture in my head Sonia going to Sabzi market and buy.
Someone's got to pay for it, right? Whether I go to the veggie market or not. Well, all right. Lots to talk about today. I mean, this is an area of worry for sure, right? Most experts feel that RBI will perhaps retain its inflation guidance of 6.7% consumer inflation. But the last tick was not pretty. In August, we saw 7% and 13% on vegetable inflation. So let's see what the RBI says on that front. But lots to talk about today. On the equities front, first up, Chris Wood of Jefferies says that the correlation between bonds and equities on the downside has seen further renewed momentum during the past week, which is exactly the kind of market action to be expected in an environment of rising stagflationary concerns. He adds that while the dollar is adding to those concerns, as it appears to be in the midst of one last final parabolic spike, on the US dollar index, he says it has surged by 5% week on week to an intraday high of 114.8. On Wednesday, it was the highest level since May of 2002. He says the more the dollar rises, the more it creates incentives to make long-term arrangements to pay for commodities in currencies other than US dollar, as is already happening.
Okay, on to a quick macro view as well. Then Neelkant Mishra of Credit Suisse says that despite positive balance of payments in Q1, they are concerned about external balances. He adds that Q2 deficit is now well known as forex reserves fell by $42 billion. But going forward too, he says annual goods trade deficit about $250 billion cannot be funded. He says even with lower oil prices, the current rate may exceed that.
Well, on the rupee, let's get you some view as well. This is Bhaskar Panda of HDFC Bank, who says that overnight the dollar index has retreated from recent top as stocks fell. He says the Bank of Japan intervened in the forex markets to steady the yen. On oil, his view is it remains subdued due to demand fears. He says in India, policy announcement from the RBI MPC is due. Given this backdrop, he expects higher volatility in the dollar INR rate today, and that they expect the dollar INR pair to trade in a range of 81.5 to 81.8 to the dollar.
Okay, and on the bonds, Bhaskar Panda says that Indian bond market participants are expecting a rate hike within 35 to 50 basis points. Yields have moved a little higher, adjusting to expectations and lower oil prices. Expect the 10-year benchmark bond yield to trade in a range of 7.3 to 7.4% for today. Okay, so that will be the big question mark on what the RBI does. We won't have to wait too long, though. But in the meantime, we'll also discuss a lot of stocks, right? So there is our top 10 segment coming up in a bit. We're looking at Lupin, Zydus Life Sciences, TCS, Tejas Networks, Coforge, Rail Vikas Nigam, SRF and Hero MotoCorp in the green. And on the red side, there's Z Entertainment and IEX that are likely to open negative.
All right, let's bring in Adrian Movat, who's now joining us. He's emerging equity market strategist. Adrian, great to have you with us here. Thank you very much. Even from the last time that we spoke, which was not very long ago, things have turned quite dramatically southwards, especially in the US and a little bit here in India as well. How are things looking to you and how things changed? The big event, I think in the intervening period from the last time we spoke has been what's happened in the UK, but I don't know how much global impact is there because of that. Your thoughts?
Yeah, so when I was last on, I was, of the view that we should be adding a bit of risk, and clearly I've got that wrong with the decline in the markets that we've seen. So we tested the sort of 200-day moving average back in the middle of August, and the markets then started to sell off. And we've had a period of extremely hawkish statements from the Federal Reserve and some other central banks as well. And I think the markets are quite unnerved by the Federal Reserve. I think a Fed that just talks about data is not doing its job properly. You know, we all know that monetary policy has a lag. You should look at the data because it tells you where you are, but it doesn't tell you where you're going. And so what we've got is capital markets pricing in an over-tightening, an accident, a hard landing. But we've also now, and you brought up the Bank of England, got financial problems emerging. So the British pension fund industry in extreme stress. Look at the decline that we've seen in gilts. If you bought a gilt in 2011, you've made no money over that time period with the sell-off that we've seen today. So we have a significant financial stress there. And I think we're going to see financial stress in other institutions, in other areas beyond the United Kingdom. And so the next stage, I think, is central banks being as sensible as the Bank of England and starting to look a little bit more at financial markets and financial stresses and do their job. And part of their job is not just inflation, their job is financial stability. And I would really commend what the Bank of England did. And I'm very sort of frustrated with the Fed, who just seem to be singularly focused on inflation. They're not thinking ahead about just how much monetary tightening is going on in the United States. Okay, we talk about the Fed fund target rate, but let's have a look at what's happened in capital markets, how much those have declined. We've got a record high dollar index, that's significant monetary tightening. We also have quantitative tightening going on as well. This is a huge amount of tightening, and you can see the collapse in monetary aggregates. And I think the Fed is just totally overdoing it. And so the markets decline, and then you get the reflexivity of financial institutions getting into stress, which causes more selling.
No, you very nicely kind of sort of put, Adrian. But, you know, we got people investing greats like Stanley Druckenmiller, etc., who've made this point repeatedly, very recently on the network, on CNBC in the US, that the basic fault was that they were late by a year, the Fed, in terms of, you know, they were still doing full-on QE and printing when retail sales, for example, had gone back above pre-COVID levels, right? So they were very slow to respond. So now they have to act and act aggressively. What's the way out, really, if not this?
You see, I find, you know, what Stanley Druckenmiller said just extraordinary, because where was he in the end of 2021? Was he not aware that South Africa had sequenced the Omicron variant for COVID? We at the end of last year, it was quite possible that this pandemic was going to get seriously worse than it had been. We were fortunate that a lot of people were vaccinated. We were fortunate the Omicron variant was not as severe as previous variants. It would have been totally inappropriate for central banks to be raising rates towards the end of last year. And even in the first quarter, it wasn't clear that we would be able to exit the COVID crisis. So I think it's foolish just to say, oh, they were too late, they're 1 year too late. You know, it's total hindsight behavior. So, okay, they were sensibly considering that issue around the Omicron outbreak and the big increase in the number of positive cases. Now, we then had Russia invading Ukraine, which pushes up energy prices.
Although
you know, as you say,
to be fair, he did write a Wall Street Journal op-ed, I think, back in early 2021, urging, saying that, well, you must, you know, the central bank has now got to kind of put a stop to this. So, I mean, he may be wrong, and that's your opinion, but the fact is that he did point it out back then. So, I mean, he's not saying this now; he's been saying this for a year, for a year and a half.
Fair enough.
Sorry,
But we can't deny the fact that there was the Omicron variant. We can't deny the fact that the number of cases was rising rapidly, and countries are putting in place flight bans, and you know, there was a lot of potential damage to the economy going on there. So, you know, we can. I think the mistake that we're making here is actually this transitory story. A lot of the inflation pressures at the moment are transitory. People talk about the tightness in the US labor market, but if you look at the non-farm payroll, in the total number is exactly the same as it was entering the pandemic. So we've really just re-employed those people. And we're just in that period where at a micro level, there are all these dislocations, but in a dynamic economy like the United States, those dislocations will be resolved. And so I think we're overreacting to the headline inflation rate and not thinking enough about the recent history and what has caused this inflation.
Yeah, hindsight is...
Because I go back to, we all love to sort of talk about monetary aggregates driving inflation, but we've had a long period of things like QE and there wasn't much inflation. What we've had is the most dramatic dislocation to the global economy that I've ever seen, courtesy of this pandemic.
Yeah, hindsight is 2020, right, Adrian? So everyone with the benefit of that can have the opinion. But Adrian, you've tracked Indian market for so long. The whole debate last month was decoupling, whether the market's going through some kind of decoupling or not. That's been thrown out of the window, and how in the last 1 week. But even then, our market, Indian market, is still relatively outperforming both in the currency market and in equity markets. What have you made of that, and do you think this outperformance can sustain or maybe even can become more pronounced?
Well, your fundamentals are better than other major economies. Your inflation problem is better. You've got no growth problem at the moment, very high economic growth. And that's then reflected in less concern about earnings than we're seeing in other major markets. So I think India can continue to outperform, but it's likely to be an outperformance in whatever direction the global markets are going. And at the moment, it's falling less than other markets.
Okay, it is falling less in other markets. We have run out of time, but not out of questions. Adrian, always a pleasure speaking to you. Thanks a lot for joining us. The big event, of course, today will be the RBI policy decision. A CNBC-TV18 poll indicates that a majority of market participants are expecting a 50 basis points rate hike, while GDP and inflation forecasts are expected to remain unchanged. Lata is now joining in with an editor's take ahead of the policy decision. Lata, good morning. So many questions from my end, but the commentary on inflation will be important to track given what's happened so far.
Yeah, I would assume that would be. But yeah, as you say, 50 basis is practically in the price. What is also in the price, if you looked at the 1 year ahead OIS, the overnight index swaps, they are factoring in something like a 6.75 peak repo rate, even more, actually 6.8. The market will really wonder what RBI is hinting at in terms of future rate hikes. They may just say data dependent and not do anything, and that's why the stance will become important. The stance is withdrawal of liquidity. Do they make it neutral? Do they have a stance at all, or are they going to change the wording? Just to know how many more rate hikes are there. That's exactly what the market will want to know, and they will want to know whether RBI will provide liquidity. At the moment, banks are actually borrowing from RBI because the advance tax money is stuck with government. It's not getting spent very fast. So, at times like this, will RBI be a little generous with liquidity? What are they saying? What words do they use? That will be extremely important for the near-term movement in yields. And then, yes, anything that they can say in favor of providing some NRI flows, anything in support of the rupee. Unlikely now, but, the market will always hope.
Okay, well, anything on lowering the GDP forecast? Do you think that...
they might lower the GDP forecast. 7.2 is higher than many forecasts. They may bring it to 7. That won't really move much, and I doubt they will do much for inflation. They're terribly worried about the cereals inflation and the vegetables inflation that you alluded to. So at the moment, tinkering any of those numbers may be unlikely.
Okay, Lata, what about this macro number that came yesterday, the current account deficit?
The current account deficit is a very big positive for the rupee market, because people were expecting a 3.5% to GDP. Current account deficit's coming in at 2.8. There are a lot of skeptics out there. Why is the monthly data and the quarterly data not matching? If you go by the monthly data, it should have been 3.5. But be that as it may, that is the given number now, 2.8. Market will be very happy about it. If you extrapolate it for 4 quarters, then, you can be even happier. But I think even these numbers were not needed. Look at the way Chinese yuan has strengthened from 7.22 to 7.12. So clearly today is a pro-rupee start. we'll have to take it as it comes. But besides the dollar peaking off, the way in which yuan has moved 10 points, hardly ever so much, all that will be positive for the rupee. The second half borrowing has come in lower than expected. That also is important for the bond market. Everybody was pointing for a 6 lakh crore. It's come in at actually 5.76. The 6.92 includes the 16,000 crore of green bonds. So people are like deliriously happy about the lower number. So there is a rally on both accounts. Then you'll take it with the policy.
Oh, you'll take it from there. But you know what? In the offshore market, the dollar rupee is indicating a 40 sort of strength in the morning itself. And that will be big. Also, today is the expiry on the dollar rupee contracts at 12:30. And the way dollar has also retreated. I mean, if it was not the policy day, I mean, it would have been very easy to say today could be really a bank nifty day. The algo trade would play out where IT would fall and banks would rally, because you know, that's how it played out 2 or 3 days back on the reverse side. But even post policy, my sense is that today, you know, with the kind of shorts that you have in the bank nifty, today you could have a rally, and given that currency also will be supportive.
Anuj, so rupee stronger or dollar is stronger? You know?
The rupee is stronger. The rupee is stronger
everything indicates rupee has to be strong.
Rupee is strong.
If you go by the other Asian, Korean won, everything has strength.
Rupee is starting strong by about 40 paise in the offshore market. I think we will start at 81. 45, 81,
yeah,
50.
81 and a half or something.
Thereabout, yeah. Well, thanks, Lata, for that. Of course, Lata will be back with the policy. For now, we need to take a break. Up next, our list of top 10 stocks lined up.
Okay, let's talk about the big events of the day and, of course, all the stocks to watch out for. There's the RBI policy coming up in just a few hours from now, and our entire research team is joining in to tell you how to approach individual stocks ahead of the market opening today. So let's welcome all of them. Anuj, let me begin with you. What are you looking at?
You know, Sonia, unless there's some shocker from the RBI, I think today could be really a bank nifty day. And that algo trade that I spoke about could play out today, the buy banks and sell IT. And I think in that, the strong ones, SBI and ICICI Bank, I think these are the ones which have been the go-to stocks. They've both corrected now back towards the 20 and 50-day moving average. And normally, you know, that's the first test of strong stocks towards the 20 and 50 is respected. So I'll keep an eye, provided, as I said, you know, the market gives us an indication that, you know, and there's no shocker from the RBI. But Z would be in focus. Yesterday was that CCI meet, and I guess it's, you know, it's not given any conclusion, Mangalam. I mean, not accepted, not rejected. So how does the stock move?
That's correct, you know, so there hasn't been any conclusion. So the stock remains in a limbo, perhaps a bit of an overhang until any clarity comes by. But remember, Tim C has gathered from her sources that, you know, the Competition Commission has asked both Z as well as Sony to actually make written submissions before them. So while the meeting is inconclusive, remember on the 1st of September, the CCI had asked for more information after the initial review of the Sony Z merger as well. The latest data that we have indicates that, you know, the combined market share is close to around 36%. So there shouldn't be a CCI issue, so to say. But until there is any clarity coming in, there would be, you know, some weakness in the stock, or there would be an overhang. And this is what we saw yesterday as well, where the stock corrected about 5% from the high. So this is something that we expect today as well, with the sentiment of the market, maybe see some red at the open.
Okay, thanks a lot, Mangalam, for that. Well, let's talk about some pharmaceutical names now. Lupin and Zydus Life are on our radar. Ekta will tell us why. Ekta, morning.
Thanks for that. Well, Lupin was down and out in yesterday's trading session. Maybe we could see some amount of reprieve today because they have received approval for a particular drug which is used for an overactive bladder. The market size is quite large, $2.4 billion. It is approved from their Nagpur facility. Analysts say it's a confidential settlement date. The base case could be on launch next year. But remember, it is expected to be quite competitive with around 6 to 7 filers. So the opportunity is not expected to be that large for Lupin, but it could be a sentiment positive. Zydus Life, sentiment positive as well. The US FDA conducted an inspection of their manufacturing facility at Ahmedabad. It was a pre-approval inspection, which is ahead of a drug product. And they received 2 observations, no data integrity. So maybe a thumbs up for Zydus as well.
All right. Ekta, thanks very much for that. Rima is here with TCS, Tejas Networks and Coforge. Rima, hi, morning.
Hi, morning. So let me start with TCS as well as Tejas Network. There is a report in Economic Times which says that TCS and BSNL are in the final stages of closing a $2 billion deal, which will help BSNL launch its 4G services. So $2 billion is a 16,000 crore rupees deal. There were a lot of negotiations around pricing, but finally they appear to have been ironed out. So it's a positive news for TCS. And watch for Tejas Networks, because Tejas Networks is now a Tata Group company, and according to the report, they will be locally manufacturing the telecom network equipment for BSNL. We've not verified this news, but if it's true, it will be a positive for both these players. Coforge is another one on our radar because the company has been granted a patent for a proprietary solution which will help help banks and financial institutions manage their risk more effectively. Back to you.
All right, thanks a lot, Rima, for that. Well, moving on, Vivek is with us. He'll tell us about Rail Vikas Nigam and IEX and why he's tracking those stocks this morning. Vivek, over to you.
Well, good morning. Some positive news flow coming in for Rail Vikas Nigam Limited. The company has won an EPC order of over 400 crores from the NHAI. Now, this particular order win is for the construction of a 4-lane highway in Andhra Pradesh. The other stock to keep an eye out for is IEX. CERC, the Central Electricity Regulation Corporation, has actually gone ahead and done a comprehensive review of the situation in the power market and other factors that have actually impacted the power demand as well as supply. So what is it that they've decided? They've decided to extend the price cap on power exchanges for 3 months till December 31. So status quo as far as the price cap is concerned. What they are anticipating is that they anticipate peak demand to actually go higher as in the next couple of months, and which is why they've maintained status quo as far as the price cap is concerned.
Okay, Vivek, thanks a lot for that. Let's go across to Sonal. She is tracking SRF and Hero MotoCorp. Sonal.
Good morning, Anuj. For SRF, they have commissioned one of their projects, which is a P38 project for 300 metric tons per annum of capacity. They had announced it already. The cost was 58 crore rupees, and now it has come on stream. So that is a positive news for the company. Hero MotoCorp has announced an interesting collaboration. They have collaborated with California-based Zero Motorcycles, which is into manufacturing of premium electric motorcycles and powertrains. So the company's board has approved an equity investment up to $60 million in Zero Motorcycles to expand their product portfolio. So this is an interesting collaboration. This stock will be in focus as well.
Okay, thanks a lot for that. So here's a quick recap then in case you missed out on any of the stocks with positive news flow. There's Lupin, Zydus Life Sciences, TCS, Tejas Networks, Coforge, Rail Vikas Nigam, SRF and Hero MotoCorp. While stocks with negative news flow, there's Z Entertainment as well as IEX. But let's also get a quick handle on what's happening in the world of commodities. Manisha Gupta, our commodities expert, is joining in now this morning to tell us more about that. Manisha, good morning.
Thank you for that, Sonia. Well, many of the commodities have turned into positive, especially with the dollar index trading at and below 112 from the highs of 114.5. So you have the gold prices which have turned positive on the week. Even crude is up by nearly 3% on the week right now. The decline in dollar index is one thing, but the decline in U.S. inventory is another. And then the OPEC and allies meeting on 5th of October is awaited, where Russia as of now is insisting on an output cut by 1 million barrels per day. The metal prices also have seen a strong rebound. We have seen copper, aluminum, zinc turn up by nearly 1 to 1.5% in the overnight market. The Chinese manufacturing data has been positive, and the China is refilling stocks ahead of holidays that start from 1st of October. So ahead of that, good amount of buying in metals as well.
All right, Manisha, thank you very much for that. That's commodities and metals specifically in focus. We'll take a quick break here. Up next, Deepan Mehta of Elixir Equities joins us for some fundamental stock analysis markets, according to him, in just a bit. We'll also in a bit connect with Pankaj Polar of Cosmo First to discuss their business outlook going forward. Stay tuned.
Come back. Well, the SGX Nifty is indicating that we'll have a minor gap down. Although, I mean, my sense is that today is one of those days when the SGX Nifty could actually be wrong, given the way the dollar rupee will open and the dollar index has retreated. Deepan Mehta is joining us, passed up as director at Elixir Equities. Deepan, hi, good morning. Let's start with Z, because that's the one where there is this overhang, right, of CCI, because everyone is assuming that once it's cleared, you have a nice sort of multinational media corporation available at 5 times price to earnings, right? So, how do you approach it? Buy it even with the overhang, or wait for this to clear out, or just avoid it?
Good morning, Anuj, and thanks for having me on your show. Yeah, it sounds so nice and simple that you will have a nice big media company with MNC parentage. And I know that in our markets, MNC stocks do get a really high premium because of the quality of the management and corporate governance standards. But I think it's a tough industry. The competitive intensity is very high, and it's got major, headwinds coming from disruption coming through OTT. And on the whole, I think it's going to be a bit of a challenge for the management. So I would just like to wait and watch. The best time to buy Z and some of the other media companies would be when you're actually convinced that the worst is over and ad revenues are starting to pick up. And most importantly, that their OTT division has stabilized, is no longer a drag on the operations, and is going to be actually positively contributing to the bottom line, which is not the case with any of the listed media companies at present. And it's a checkered past track record as far as Z is concerned. So I would just put it under the wait and watch list.
Okay, under the wait and watch list. I wanted your thoughts on some of these chemical companies, right? They've come back in a big way. SRF has announced that they're putting more capex on board at their Dahej plant as well. What would your pick of the pack be here?
Good morning, Sonia. Yeah, I think specialty chemicals are back in focus. And certainly, I think the longer-term trajectory for the industry is very good given China +1. And now we're having this Europe +1 also investment theme, which has got a lot of players excited. And on the whole, I think capacity expansion should drive growth. But there's one bit of caution I'd like to, express over here. That being that these companies, you should expect volatility in their earnings. At the end of the day, B2B businesses, and passing on cost increases should always be a bit of a challenge. Having said that, with usual disclosure that we and our clients are invested, we like RP industry at this point of time. We are also invested in SRF. And then there are many new listings which have come through Aether Industries, Anupam Rasayan. I think all of them are not completely discovered in the market, but they have good business models. And if you track them over a longer period of time, I think you could find a few winners amongst the newer listings. I'm sorry, I don't have all the names, but at least 10 to 12 new specialty chemical companies have got listed in the past 12 months or so. And all of these have pretty interesting potentials going forward as well.
Okay, all right. Just stay on. Do you track, if in one quick minute, if you can tell me if you track Cosmo Films? It's now called Cosmo First. The reason I ask you, Deepan, is because we have the management coming up in just a few minutes from now. So is that a stock that you've tracked actively?
I had tracked it many years ago, but I'm looking forward to the interview just now.
Okay, so here it comes then. The packaging sector is in focus because of the raw material situation. There was a lot of pressure that this space witnessed in the quarter gone by. So let's find out more. Pankaj Podar, the Chief Executive Officer at Cosmo First, joins in now. The stock, in fact, has taken a hit as well. It's down almost 14% in the last 3 months. Pankaj, thanks a lot for joining in. First on, the raw material situation. The BOPP film margins, I think they came in at about 35 rupees a kilo in quarter 1. You used to enjoy about 45-50 rupees a kilo as well. Is there more pressure expected, or do you think the worst of the raw material price pressure is now behind us?
Hi, very good morning. So see, the quarter 1, yes, towards the end of quarter 1, the margins had come down, I would say more towards the levels it used to be in the past, because previous 2 years we had much higher margins. They have stabilized at the normal levels in quarter 1 and in the quarter 2 as well. And if we otherwise see the raw material cost, which had again gone up very substantially last year, has come down, and it touched the bottom and has slightly gone up towards the end of quarter 2. Obviously, in quarter 2, the entire industry will have stock losses because the raw material stocks the prices went down. But in general, I would say now the raw material costs have stabilized, touching close to the bottom levels. And similarly, on the sales price, also the margins are back to 30-35 rupee levels, which used to be there, barring the 2 last years when the margins were generally much higher.
So, yeah, so that's the point, Mr. Podar. Good morning. In the fourth quarter of FY21, that margin was 45 rupees, as you said, much higher. So from here on, what should we expect? In the 35-ish region? Or could it move higher from here?
See, for Cosmo, first important thing is it impacts us only for, 1/3 of the volume, because 65% of our volumes are into specialties as such. But even for 35%, yes, it impacts us. And, if you see the 10-year trend for this industry, there are occasions where this margin has gone up to 45, 50 even. And then there are quarters where it has even gone down to, say, 20 rupees. But average, if you do it, it is always hovering around 30 rupees. And that is a level where it is right now as well. And that's a reasonably sweet spot for the industry. It's neither too good nor too bad, because if the margins go too up, then you see many more investments coming. And if it goes too down, that's also not good for the existing players. So this is a fair level. And this is the level at which, and we have to also remember that 3 new lines have come up and they have been very nicely absorbed, which talks about the India story, that the demand has been continuously going up. And this is in spite of the fact that Europe and US both are facing tremendous challenges, and India being an export country to some of these economies, in spite of the headwinds over there, in spite of the fact that, the raw material prices went down, where everything kind of, the expectations of the customer, the distributor starts reducing their stock levels. In spite of all these things, the margins are back at the average level. So I feel pretty comfortable with it.
I'm sure you understand where the concern emerges from, right? Because if you look at the stock as well, the stock has lost 40% of its value in 2022. So clearly shareholders are worried not just about raw material pressures, but demand in general because of what's happening. Can you quantify this for us? You're saying demand has picked up across 3 of your segments: specialty chemicals, flexible packaging and pet care, which is fairly small. Can you tell us what is the kind of growth that you see over the next 1 year, and where are the pockets where pressure still exists?
So I would say demand is in India specifically is going very well. In Europe and America, we do see there are issues over there. And if I talk about businesses specifically, film business, we expect to grow by 10% this year. The specialty chemical business, it's a small business still. It is expected to more than double this year. And Ziggly, we are expecting, last year we had 6 months of sales, and this year there'll be a full year impact. So we expect that Ziggly business also will be going up by 10 times from what we did in the first 6 months of last year.
So much to ask, Mr. Podar, but we'll have to limit ourselves to a few because of time constraints today. So the pet care business, which you incubated, I think, just last year, right? It's a D2C business. Not just because I'm a pet owner, but also because it's such a large business in the US, etc. I mean, these are huge businesses and very, very steady. What is the aim? What is the ambition for the pet care business? What do you see? What are margins like? How much investment will be required? If you can provide us with a snapshot.
Yeah. So see, it is one of the fastest growing sector within the consumer goods, even in India. It's been growing at 20%. I think during the COVID period, it went up by 30% because people really felt the need to adopt pets. But on an average, last 3, 4, 5 years, it's been growing at 20+%. And we feel that it will continue to grow like this because the pet population in India is still less, families getting smaller, more disposable income. So the industry will grow. It's a small industry. It's a 5,000 to 6,000 crore industry as of today. And what we see, there are a lot of unorganized, small individual setups. What we are trying to bring is an organized ecosystem for the pet parents, where all kinds of services and the products, are available at quite a decent pricing for the customers. And we see a very good momentum from the customers really loving the kind of, not just the products, but also the services that we have brought into the picture. And, seeing the initially we were saying that we will open 150 stores in 3 to 4 years, but the growth potential is so much, we'll have to see how we progress. we may end up even opening more stores, and we have to literally see that what time we start earning money in this business. But potential-wise, this industry has a lot to offer.
Okay, as they say, right, plants are the new pets and pets are the new kids. So if that is the case, this 6,000 crore industry is going to get bigger and better over the years. Thanks a lot for joining in. That's Cosmo First, talking about different businesses and how the growth is shaping up there. Let's take a quick break. On the other side, Mitesh Thakkar and Shrikant Chauhan will be joining in for some technical trades. Stay tuned.
Welcome back. Mitesh Thakkar and Shrikant Chauhan now join us for some fresh trades. Gentlemen, good morning. Mitesh, how would you approach the index today, both Nifty and Bank Nifty?
Good morning, Anuj. I've been maintaining that, possibly 16,750 or thereabouts is the lower end of the range. So we are now close to that. We talked about taking long position yesterday. I think as long as 16,750 doesn't break and we have a very mild gap down kind of an opening, then I think it'll be a wonderful opportunity to go long. Keep a stop just below 16,720, 725 zone. And I think once this bounce back kind of take shape, then I think I would expect a test of either 17,000 or in a best case scenario, even 17,200, 250. So I think trading with my long bias on the index, given the fact that index is now oversold and is close to support area.
What was the stop loss you mentioned, and also the Bank Nifty call, Mitesh?
Sure. So on 16,750 is the support area. So you can typically take about 20-25 point kind of a leeway on the downside before putting a stop loss. So 16,720, 725 is my stop loss zone. And on the Bank Nifty, I think very similar kind of setup. Oversold, though the supports of Nifty are stronger than the Bank Nifty currently, but the Bank Nifty has good support around 37,750, 37,700 mark. Again, a closing below, an opening around that level and a bounce back from there would indicate a long position with a stop loss just about 50 points below the base.
Okay. Shrikant, good morning. Your index trade?
Good morning, Anuj. I think the entire zone between 16,800 to 16,600 is going to act as very good support for the market. If we go through with the volatility in the world market, it is very difficult to say that exactly where the market will stop. But between these levels, 16,800 to 16,600, we should be buyer in the market, because again, we are expecting one strong rebound in the short term, which will take the market to the levels of maybe 17,200.
Okay, well, we'll do one thing. We'll take a break and come back and take stock calls. Pre-opening rates will be there, and Rohan Gupta of Edelweiss will be joining us to discuss trends in the chemical space.